A new year is looming, and with it, new risks and new opportunities. So, what's one thing that young investors should do with their investments in 2025? For example, if they had, let's say, $1,000, what should they do with it?
First thing first is for the young investors to define their goals. What's the money for? If it is for short-term needs, then I think it's definitely not worthy to dig into the equity markets to take the risk, because you want the money back to spend and match your short-term liabilities. So for example, things like cash, fixed deposits, money market funds, these are definitely suitable instruments for to meet the short-term needs. But let's say if the investors is looking at a longer-term goal, right, more than 10 years, then perhaps a globally diversified portfolio of stocks and bonds, depending on their risk profile, will be something that they could be looking into.
In which sectors do you see opportunities for investors?
Okay, so this is a critical one. Mr. Trump has certain perception on which industries that he is more positive on. The energy sector, the financial sector, and the technological sector, due to tax cut for deregulation, these sectors tend to do a little bit better. So overall, we are still positive on US equities. So we think that they will do better vis-a-vis their peers. We also think that investment-grade bonds is an excellent place for investors to put their money. Why? Because today you're still being rewarded very, very well for holding very high-quality issuers. Importantly, as rates continue to get cut, you're probably going to see price appreciation from investment-grade bonds as well. We also like ASEAN. With US and China being in competition, a lot of ASEAN countries stand to benefit as people try to source their supply chain outside their dependency on China and into other countries who potentially could fill some of those gaps. So we like ASEAN. Last but not least, we like gold. We think that gold is likely to outperform. In fact, our target price for gold is nearly $3,000 per troy ounce before the third quarter of next year.
I think small caps, US stocks could potentially benefit from the policies, because you're likely to see more growth in the US economy given that tariffs going to be introduced. And if we are looking at higher, longer-term yields, then value stocks potentially could be doing better than growth stock, given that discount rate were anticipated to be higher. But at the same time, we were talking about if you are long-term investors, then perhaps cutting out noises are quite important, right? Because evidence has shown that despite who is the US president, markets tend to go up in the long run, right? So managing our emotions, filtering out noises, having a very globally diversified portfolio could help us to manage risks and allow us to capture returns wherever they appear.
You know, when we talk about alternative investments, and cryptocurrency is very popular with younger investors in particular, and these have been pretty happy with Mr. Trump coming back to office. Is that something they should still consider?
When we look at Bitcoins, when we look at cryptocurrencies, we need to look at underlying, what is it contributing to the economy? Is it blockchain? Is it because it's being promoted as a preferred coin by people, right? So as a long-term investors, I think these are certain areas that we need to look at as well. There's also this concern about, speculation going up and down. So as investors, we need to also assess our risk appetite and see if it drops 50% the next day, are we able to hold, right? Will we lose sleep?
We spoke about sectors with good opportunities. Conversely, which sectors do you think face the biggest risks?
Countries and companies that are on the wrong side of Trump's potential policy, be it trade or be it on the tariff front, I think this will be facing quite a fair amount of headwinds and challenges as we move forward and when he's allowed to execute some of his proposed spend. The other one is clean energy. I think Mr. Trump has quite clearly stated that he's not overly supportive. Last but not least, corporate America, particularly those that are relying heavily on imports to sell to the domestic market, these are going to face higher costs. And with higher costs, and if it's inflationary in nature, there's going to be a double whammy. And a lot of these smaller companies could potentially face challenges when the effect trickles down into the system.
Given all these different running cogs in the global economy and the risks ahead, what should financial priorities for younger workers especially be in the coming year?
Number one is to make sure that we have emergency funds, because at least 3 to 6 months of your expenses or even income, right? Because we were talking about risk, we're talking about uncertainty, we might be talking about even restructuring in certain sectors, right? So having emergency funds allow us to be able to cushion these uncertainty. Other priorities would be that to manage their day-to-day expenses. At the same time, they also, at the later stage of the Gen Z workers, the older ones, they might be trying to buy their first place, getting married. All these potentially could incur expenses as well, right? So making sure that they have a budget set up, measure their incomes and expenses, tracking where they are, will allow them to know where to cut, where to save, and at the same time, allow them to work towards their future goals.
So what do you see as a good portfolio allocation for 2025?
Again, we look at defining our goals, defining our risk appetite. We look at 3 areas: your need to take risks, your ability to take risks, and your willingness to take risks, right? So if we have to define our goals, we look at need to take risks, right? How much returns you need in order to meet your goals. Ability to take risks, that will determine what kind of asset allocation, right? Because ability to take risks is not just about how long you can invest the money for. We also have to assess our financial health. Are we overly in debt before we take the risk? At the same time, are we adequately insured in terms of insurance? Because the last thing you want is to cash out your investments because of a medical issue, right? So all this affects your ability to take risks. For investors to determine their asset allocation or the portfolio allocation, we also need to look at our willingness to take risks. For example, are there any life events that has happened in the past? For example, maybe the investors have seen their parents quarrel over money because of stock market. The willingness to take risks might be affected as well, right? At the same time, we were talking about appetite, right? How much drop you are able to tolerate in order to not lose sleep, but because you need to be invested and hold throughout the volatility in order to get the returns of the instruments you buy into. So need, ability, and willingness to take risks are things that we need to look at to consider whether you should have more into stocks or more into bonds in the coming year.
When you have conversations with your financial advisors, we tend to focus on returns. Returns, unfortunately, is something that you cannot control. The markets happen, black swan events happen, and different things can affect your rate of return. What you can really control is risk, the kind of products that you put within your portfolio, your appetite and time horizon, which you earlier articulated. So a lot of these things has a direct and material impact on your risk profile. So understanding one's risk profile is incredibly important. Focus on managing those risks. You invest a lot better without emotions, and you sleep a lot better at night as well.